Invest like a pro. Tips for value investing in today's market. In a time when flashy tech stocks and short-term trades dominate social media feeds, value investing still works if you know how to use it right. The basic idea is simple. Buy quality businesses for less than they're worth, then wait. But in today's market, spotting real value takes patience, discipline, and a sharper eye. Here are a few tips that can help you invest like a pro. 1. Focus on fundamentals. Skip the hype. Look at earnings, cash flow, debt, and return on equity. Does the business make real money? Is it growing steadily? Can it survive tough times? These are the questions pros ask before they buy. A strong balance sheet and reliable profits matter more than a hot product or media buzz. 2. Know the difference between cheap and undervalued. A low stock price doesn't mean it's a good deal. It could be low for a reason. A true value stock is one that's trading below its actual worth, not just because it's out of favor, but because the market has overreacted. Check the company's history, leadership, and industry trends before calling it undervalued. 3. Use a margin of safety. Even the best investors are wrong sometimes. That's why pros look for a margin of safety, buying at a big enough discount that even if things don't go perfectly, the downside is limited. If you think a company is worth $100 per share, wait until you can buy it at $70. That extra buffer protects you from risk. 4. Be ready to wait. Value investing isn't fast. It takes time for the market to notice a company's real worth. Professionals know this and build it into their strategy. They're not trying to get rich quick, they're trying to build wealth without losing their shirts. If you're not willing to hold a stock for years, you might not be thinking like a value investor. 5. Watch the market mood, not the noise. Markets are driven by emotion in the short term. Fear and greed make people buy high and sell low. Train yourself to do the opposite. When people panic, opportunities open up. When everyone's excited, step back. Value investors think independently and stay grounded in data, not headlines. 6. Stick to what you understand. This one comes straight from Buffett. Never invest in something you don't understand. If a company's business model or financials are confusing, skip it. You don't have to invest in everything. Focus on what you know and build from there. 7. Keep learning. Markets change. Businesses change. But the value approach stays useful if you keep sharpening your skills. Read company reports. Study great investors. Follow long-term trends. The more you understand how businesses work, the better you'll be at spotting value others miss. Final thought. Value investing works, but only for those who stay disciplined. It's not about jumping on trends. It's about knowing what something is worth and having the patience to wait for the right price. Stay calm, stay focused, and stick to the math.